Hi everybody, welcome to another update on the stock screener. Since we are comparing so many gas companies, let's do another one, CR.TO Energy vs Pieridae Energy. We already know why we need to be in gas, because we are transitioning to EVs and we have the gas arbitrage, demand for oil going down, a lot of cars getting off the roads into EVs, and natural gas is the future. This is the latest chart. Natural gas is going up. It's now already 10% up again. So at 7 going to $8. And EU gas is still very high. So we are going to compare these two companies. Pieridae is in an uptrend, but CR.TO Energy seems to be doing well as well. So looks like they are both very good companies. But CR.TO Energy is much higher in market cap. It's 4 times bigger. PE is currently higher. So based on PE ratio, this is cheaper. Both have a lot of gas, 80%. Production is about the same. So Pieridae has a bit more production. So that's already one thing to consider. Why is Pieridae so cheap, considering that the production is even higher? Also, the capacity here is only at 40,000. So they need to build more infrastructure to get the production higher, because 33,000 is almost 40,000, while at Pieridae there's still a lot of capacity. So the CR.TO Energy is constrained here. They need to build more infrastructure, and that costs money. Debt is around the same, 200 million. Interest rate is much lower at CR.TO Energy. So if you want financial leverage, go for Pieridae Energy, because they have much higher interest rates. Decline rate is very low at Pieridae Energy. I'm not sure what the decline rate is at CR.TO Energy. They don't say it, but I have seen one of those wells and they are declining very fast. So pretty high decline rates. Capex, you can see here, is also much higher than at Pieridae. So that confirms the higher decline rates. Operating costs are better at CR.TO Energy, but of course we have more leverage here. Free cash flow is about the same, a bit higher at CR.TO Energy. They have much more tax pools at 1.2 billion, so that's a very good thing to have. Reserves are about the same, but the 2P reserves are very high, 35 years. So in the long term, CR.TO Energy has more reserves. So if you look long term, I think CR.TO Energy could increase a lot of production in the future. Royalties about the same. So let's take a look at the leverage. So at 10 ICO gas price, this is still 15x possibly, from 200 million to about 3 billion. At CR.TO Energy, the chart looks a bit the same, but here the upside is only 4x based on 10 ICO. That's because CR.TO Energy is already very expensive, right? It's already at 1 billion market cap, and the production is even lower. So that's why it has less leverage to the gas price. And the PE ratio is already at 5. So I think it's still better to own Pieridae Energy than CR.TO Energy, because there's more leverage, there is lower decline rate, more financial leverage, and very good reserves. So Pieridae Energy is still unbeaten. We are going to keep Pieridae Energy, and I'll see you in the next video.